Have you ever wondered why the cost of goods and services seem to always be on the rise? This phenomenon is not a trick of your mind. It's something economists call inflation. But what exactly is inflation? In the simplest terms, inflation is the rate at which the general level of prices for goods and services is increasing. Imagine you have a favorite candy bar that costs $1 today. If inflation is at a rate of 2% per year, that same candy bar will cost you $1.02 next year. It's the same candy bar, but you're paying more. This happens across the board, from the groceries you buy to the rent you pay. And as prices rise, the power of your dollar, your purchasing power, falls. So you're essentially getting less bang for your buck. So in essence, inflation means you're paying more for the same goods and services. Let's put this into perspective with some real-life examples. Imagine you're at your local grocery store and you're in the bread aisle. 10 years ago, a loaf of bread might have cost you $1. But fast forward to today, and that same loaf of bread might set you back $1.50. That 50-cent increase? That's inflation at work. Let's take another everyday example, a gallon of milk. Let's say, 15 years ago, you could buy a gallon of milk for $2.50. Today, you might find the same gallon of milk priced at $4. The $1.50 difference between the price then and now is a clear reflection of inflation. And it's not just confined to food items. Consider gasoline, a necessity for many of us. 20 years ago, you might have filled up your tank at $1 per gallon. Now, you're likely paying more than $3 per gallon. That's a stark increase, isn't it? That's inflation quietly chipping away at your purchasing power. Inflation can also be seen in the housing market. Let's say 25 years ago, the average price for a house was $100,000. But flash forward to today and the average price has soared to $300,000. That's a $200,000 increase, a clear indication of inflation. And it doesn't stop there. Even your morning cup of coffee isn't immune to inflation. 10 years ago, you might have spent $1 on your cup of joe. Today, that same cup might cost you $2. So, what do these examples tell us? They demonstrate that the prices of everyday goods and services have a tendency to rise over time. That's inflation in action, folks. It's a slow and steady process, often so gradual that we hardly notice until we look back and compare prices. These examples illustrate how inflation impacts our everyday lives. Now that we understand what inflation is and have seen some examples, let's talk about its impact. Inflation is like a stealthy thief, silently eroding the purchasing power of your money. Imagine having $100 today, but next year, that same 100 could only buy you what $80 could today. That's inflation at work. It's the gradual decrease in the value of money over time. Inflation can also impact savings. If the rate of inflation surpasses the interest earned on your savings, you're technically losing money. That's why it's crucial to consider inflation when planning for the future. But it's not all doom and gloom. Inflation can also be good for an economy. It can stimulate spending and investment, which in turn can lead to economic growth. Remember though that too much of anything can be harmful, and it's the same with inflation. Inflation can be a double-edged sword. It's beneficial for economic growth but can also erode your savings. Now the million-dollar question, how can we beat inflation? Well, the good news is there are several strategies you can employ to outpace inflation and protect your wealth. Let's dive into some of these methods. First off, we have stocks. When you invest in stocks, you're essentially buying a piece of a company. As the company grows, so does the value of your investment. Over the long term, the stock market has historically provided returns that beat inflation. Of course, it's important to remember that stocks can be volatile and investing always carries risk. But with due diligence and a diversified portfolio, stocks can be a powerful tool against inflation. Next up is real estate. Owning property is another classic inflation-beating strategy. As the cost of living rises, so does the value of homes and rental rates. This means that real estate can provide both a hedge against inflation and a steady stream of income. Just remember, like any investment, real estate comes with its own set of risks and responsibilities, so it's crucial to do your research. Finally, we have commodities. These are physical goods like gold, oil, or wheat. The price of these goods tends to rise with inflation, making them another potential hedge. For example, if you've ever heard someone say, "Invest in gold," this is why. Gold has been a store of value for thousands of years, and many investors turn to it in times of economic uncertainty. Now, these are just a few strategies to beat inflation. There are others out there, like investing in inflation-protected securities or starting your own business. The key is to stay informed, stay diversified, and stay proactive. Remember, inflation is a normal part of the economy. It's not necessarily a bad thing, but it's something we should all be aware of and prepared for. And with the right strategies, you can not only protect your wealth from inflation, but also use it as an opportunity to grow your wealth. With the right strategies, you can protect your wealth from the effects of inflation. Inflation is a reality we all face, but with knowledge and strategy, we can mitigate its impact. By understanding what inflation is and how it affects our daily lives, we can better plan and make financial decisions that ensure our money keeps its value over time. We've seen real-life examples of how inflation plays out, and we've explored its impacts on our purchasing power and overall economic health. We've also discussed strategies to beat inflation, from investing in assets that appreciate over time, to keeping a diversified portfolio, to adjusting our spending habits. It all comes down to being proactive, staying informed, and making smart decisions. So, what are your takeaways from this video? Armed with this knowledge, you are now better equipped to navigate the financial landscape, no matter the inflation rate. Please follow, subscribe, and share your thoughts in the comments section. Stay tuned for more empowering financial content. Thank you for watching.